This video contains first part of single or output costing in the 5th chapter named, Single or Output Costing in the textbook Cost Accounting. This is more suitable for B.Com, B.B.A, M.Com and M.B.A of all universities of India and foreign countries. It is suggested to study through laptop. Presented by Dr.M.Wilson. Chapter 5, Single or Output Costing. Single or output costing is a method of costing adopted by the concerns which produce a single product. The single article may be in 2 or 3 grades. The total cost of production for these type of articles will be uniform for all the units produced in a period. Hence, the cost per unit of the product can be known by dividing the total cost by the number of units produced in a period. Examples of concerns which produce single product are brick kiln, mines, quarries, collieries, flour mills, cement factories, sugar factories, etc. The cost unit in single or output costing depends on the nature of the business. It may be ton, kgm, number of units, etc. Procedures of preparing single or output costing. 1. Classification of costs. All costs incurred for the production for a period will be classified into direct costs and indirect costs. The direct costs include direct material, direct labor, and direct expenses. Indirect costs, otherwise called as overheads, includes indirect material, indirect labor, and indirect expenses. It can be classified according to the functions performed in the organization. Accordingly, the indirect costs are classified into factory overhead, administration overhead, and selling and distribution overhead. These indirect costs would be apportioned for production during a period on the basis of suitable basis of apportionment. 2. Treatment of stock of raw material. There may be opening as well as closing stock of material during a period. It will be adjusted with the purchase during the period. In order to know the material consumed, opening stock will be added with purchase of material and then the closing stock will be deducted from it. That is, material consumed equals opening stock plus purchase minus closing stock. 3. Treatment of work in progress. Work in progress is otherwise called as partly finished goods or incomplete product. When the accounts are prepared for a specific period of time, the incomplete product will exist. There may be both opening and closing work in progress. The cost of opening and closing work in progress will be treated after adding the direct cost with the factory overhead. The value of opening work in progress will be added and closing work in progress will be deducted from it. 4. Treatment of stock of finished goods. There may be stock of finished goods in the process of production and sales for a concern. Stock of finished goods may be in the form of opening and closing stock. In order to know the correct cost of goods sold and the costing profit, the stock of finished goods should be adjusted after the direct cost, factory overhead, and administration overhead cost of production. Opening stock will be added with it and closing stock will be deducted from it. That is, cost of goods sold equals opening stock of finished goods plus cost of production minus closing stock of finished goods. 5. Preparation of cost sheet. Cost sheet is a statement of cost incurred for the production during a period. There is no time basis for the cost sheet. It may be for 15 days, 1 month, 2 months, or 3 months, etc. All the costs incurred in the production of the product during a period should be systematically stated in the cost sheet. The direct cost, like direct material, direct labor, and direct expenses, will be stated first. The total of these costs is called prime cost. Adjustment of opening and closing stock of material will be done before calculating the prime cost. Then the factory overhead will be added with the cost. This is called the works cost. If there is any work in progress, then the opening and closing work in progress should be adjusted before calculating the works cost. The administration overhead will be added with the work cost to find out the cost of production. If there is any opening and closing stock of finished goods, then it will be adjusted to find out the cost of goods sold. Selling and distribution overhead will be added with the cost of goods sold to know the cost of sales. 1. Cost sheet without stock and work in progress is presented here. 2. Cost sheet with stock and work in progress is presented here. Illustration 1. Prepare a cost sheet and find out the cost of production and costing profit from the following information for the month June 2025. The details are presented here. Solution is presented here. Illustration 2. X Limited is providing the following information related to the month of July 2025, in order to prepare cost sheet and to find out the cost per unit. The details are presented here. Solution is presented here. Solution is presented here. Illustration 3. ABC & Co. Limited provides the following information from its costing records for the month of July 2025. The details are presented here. Solution is presented here. Illustration 4. KMW & Co. Limited provides the following information from its costing records related to the month of August 2025. The details are presented here. Solution is presented here. Solution is presented here. Illustration 5. The costing information related to the year ended the 31st of March 2025 of XYZ Limited are as follows. The details are presented here. The details are presented here. Solution is presented here.